Hello, chart watchers, and welcome to this Monday, May 14th, Market Watchers live show with your hosts, Erin Swenlin, and today, Bruce Fraser, who's sitting in for Tom Bowley. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. And let's go ahead and take a quick peek at the market before we bring in my co-host. And, there's some news that's been going around today. We'll talk about that later in the technical headlines, but I just wanted to let you know what's happening in the markets right now. And as you can see, very nice day. We had a nice gap up for the Dow Industrials, the S&P. We're kind of coming back off of those intraday highs, though. We'll have to see if we can make a reboot back up and higher. Russell 2000 leading the decline now after having that great open, and now we're watching the larger caps starting to fail. We can see that the TSX treasury yields are up right now, and we can also see TSX as far as the Canadian markets, not falling back down just yet, actually forming a flag. So we could see a little bit more in the way of higher prices for the TSX. Treasury yields are up right now, reading at 2.99%, almost at 3. We can see that the UUP right now had a big gap down, made a bit of a recovery, but it looks like we're starting back down again. Gold is mostly unchanged right now. USO oil prices rising, currently USO at 14.38. The VIX is still really, it's up a little bit today, but let's face it, when we're looking at readings around 12 and 13, we're looking at a very low VIX and a lot of complacency. Right now, semiconductors are one of the big sectors making big moves. As you can see, nice big gap up, forming a bit of a pennant here. We'll have to see if we get a breakout on the semiconductors. In particular, NVIDIA we're looking at, also up on the day. Didn't quite challenge Friday's highs just yet, so we'll have to see if NVIDIA will pick things up a little bit. And with that, I'm going to bring in my co-host, Bruce Fraser, today. Thank you so much for coming in and sitting in for Tom Bowley. How are you doing today?
I'm good, thank you. It's great to be here. I have big shoes to fill, and so I'm so glad you're here. But
Yes.
I'm thrilled to be here, and we're gonna have some fun.
Absolutely. I'm very excited to have you here. And let's see, with that, I think it's time to probably go ahead and I'll look at the weekly schedule and the agenda, and then we'll hop into some of the technical headlines. First of all, tomorrow I will be doing a workshop, and I haven't come up with a really catchy name, but I think it will be the life cycle of a trade. So you can see sort of how I plan out the trade, how I go about finding the trade, making the trade, and then finally leaving the trade. So I think that hopefully will give everybody a little bit of an idea of trading plans and how you might go about that. Dan Russo from Chaikin Analytics will be joining us on Wednesday for an extra long segment. And then Thursday, we have Julius DeKempenaar here talking RRG. And finally, on Friday, we have everything stock charts coming up. As far as today is concerned, on the agenda, Monday setups are the first ones, and you'll get to see how I pick Monday setups because with Tom gone, I've been really behind this morning. So we'll be doing that on the fly pretty much. Then since we have Bruce here, Wyckoff power charting will follow that as our second segment. And Bruce has graciously said that he will do the 10 and 10 today, although we'll see if we actually get through 10 because we really want to get your specific style of analysis with Wyckoff on some of those stocks. So we're going to give you a little extra time on that. And then finally, we'll finish up with the DecisionPoint Report. I'll let you know what I'm seeing as far as our indicators, trend models, and what's going on with the big four: dollar, gold, oil, and bonds. And with that, I guess I will get started with a couple of technical headlines here. All righty. Was I muted all that time? I don't know. I just got a big pop-up that said I was muted. All right, so I thought we'd take a look at Home Depot to start. They're going to be reporting their first quarter results, and they're saying that their same store sales growth has accelerated. So, the idea is that we're going to see some good earnings, and you can see we're already getting a little bit of a play on that with a breakout above this February top back here, forming a nice rounded bottom. And actually, you could make that your cup handle if you wanted to do that. And so now we've got that breakout, and overhead resistance really isn't out there until we get just above 205. As I was saying, the semiconductor index is looking pretty good right now. So let's take a peek at that a little more closely. All righty, there we go. And what I noticed right off the bat on this chart was this double bottom. It's not a textbook double bottom, mainly because those are reversal patterns and we already are in an uptrend, but I think you can still look for something like this to execute. You've got a trend model, intermediate term trend model buy signal right now, 20 passing over the 50. Like I said, very nice breakout here. I'm going to go ahead and annotate this one just a little bit for us. Again, this is the semiconductors index. And we really do want to see this type of action in the technology sectors. We know that's one of the big places we want to see the market do well. Of course, the NASDAQ is starting to improve quite a bit. And when you see that small caps in the NASDAQ doing well, you want to start seeing the rest of the market following along in suit. And right now, there you go. So we've got a really nice breakout on this. We have overhead resistance, not really there until a bit of a while there. So we've got the semiconductor index. I think there's definitely room for more upside movement. And again, there's that intermediate term trend model buy signal, that 20-day EMA crossing above the 50-day EMA.
If I could just make a note.
Absolutely.
It's just such a gorgeous chart. The April low, the early April low that was sprung in late April. So there's this nice spring where it took out those lows, and then it came back in and tested. And then look at this beautiful launch. It's just a really good lift up towards the highs, the resistance at the highs. So this just really looks good. Yep. It's the best it's looked since October, November.
Absolutely. Nope. So semiconductors, I would expect to see doing well. And in particular, those that I noticed that were in the news. Let's see. Qualcomm was one. So let's go ahead and we'll take a gander at Qualcomm. All righty. There we go. Huge move already. I know that it's tough to get in on these when they're already making these big moves, but look at the opportunity I think that still lies here. Let's get our auto support and resistance going on here. Right there. And you can see how it does. This matches up very well with those previous tops all the way back there in 2017. And nice gap up and trade above this particular top. So I'm really liking this chart. The only thing I would be a little bit cautious on is the fact that, that 50-day EMA is so far below the 200. There's a lot of catch-up work that Qualcomm needs to do right now. And, right now it says that the group's rally for semiconductors, Chinese regulators apparently reopened their review of Qualcomm's offer to acquire NXP Semiconductor. And so that could be a good reason that we're seeing such a big move here in Qualcomm.
That gap, the most recent gap and the jump above prior resistance probably will cause Qualcomm to pause, and that could be an excellent opportunity to look for a place to enter.
Yeah, absolutely. And again, overhead resistance, we're really not seeing any for quite a while here. So I think there's that 200-day EMA. Keep a close eye on that. But look at the PMO, great buy signal heading up out of oversold territory. And, OBV looking great. I'm sure the accumulation distribution would be nice. And then we've got that scooter starting to make a move back. And let's see what, other ones were in the news? Oh, we had a couple of upgrades and downgrades, so I'm going to show you those. Let's see here. Upgrades. LB. Actually, I don't really have any downgrades, although Xerox was one. I'll talk to you a little bit about Xerox shortly. And we can see limited brands came in and actually got an upgrade today. These are those that went from neutrals to buys as far as the various in houses, when they have, the investment houses, they make their recommendations, and these are the ones that I saw that were moving from a neutral into a buy situation as far as these investment houses are concerned. So I looked at this one and I thought, wow, they really need an upgrade because it doesn't look too good here for limited brands, even on this upgrade. I'm really shocked, honestly, that it got it when I look at this chart. I guess the one nice thing you could say, I'm looking at a weekly chart right now because I didn't see anything on that daily chart of interest. And you could see where this was very important support that we broke down below, trying to make that move back above that support level. But that's pretty important when you're looking at it lining up here with these lows, I think, from back in, 2013. 2012, and they broke below that. We saw limited brands break below that, and now we're trying to get back up above it. So it got an upgrade, but I don't see a whole lot here. Maybe one for the watch list, since they seem to know that maybe something is going on there. I'm not really sure.
That's a classic top, that 2015, 2016 into the end of the year is just, it's classic Wyckoffian distribution. And then look what followed, just the wheels came off.
Yeah.
I do think that it's encouraging that it had that really good rally in the third and fourth quarter, and then came back down as though it's trying to test that third quarter low. And so there might be an attempt to rally here.
Right. And apparently the investment houses are seeing something, giving that the upgrade. I personally, I'd have to watch this one for a while.
Yeah. This is a case study.
Exactly. Xerox was actually in the news earlier today. Apparently they were trying to get into an agreement with Fujifilm, and it fell through. There's various information about that with Carl Icahn involved in there. Basically, this has now been downgraded. Xerox has, from a buy to a hold and from a buy to a neutral. So we're not, the investment houses aren't pretty much throwing this one away, but they're just, it looks like they're advising some caution here. And when you look at the breakdown below these lows, we're not quite below the low back here from November, but we're looking at it, it's looking a bit dangerous here. And so I would definitely be paying attention to what's going on in that news. But there's that previous low that we're getting ready to test. These lows back here, I think, are the more important, especially since we lost this support right here. And then, oh my goodness, look at this PMO topping below the signal line. So not particularly good news here for Xerox on the downgrade, and I'm not seeing opportunity at this point, but we'll watch. I'm going to look at the weekly chart really quickly here for you too. All righty. So you can see we're on some very important support right now, and but we got the downgrade. There's a lot of news going on, like I said, around new board of directors. Interesting stuff out there about Xerox, so you might want to read about that more closely. But looking at the weekly PMO as well, it's tried twice to get up above the signal line and failed both times, heading lower. I don't see anything that great here on that chart. If it can hold that support, or even at 26, maybe some opportunity here. But I'd be watching the news on this one. And let's see, with that, I'm going to close it out and move into the Monday setups. Part of the reason I'm going to go ahead and move into Monday setups a little bit early is because with the preparation this morning and filling in for Tom and finding technical headlines and getting my DecisionPoint report ready, I was only just starting on finding some good Monday setups. So I thought as part of an exercise, and I know, Bruce, you've got a few you're going to show us in a few minutes. So as part of the exercise, I thought I would go ahead and show you how I go about finding my Monday setups, and we'll pick one while I'm in there. I should have everybody vote. That would have been a good poll. Which of these should be my Monday setup? So let's go ahead, and I'm going to move over to, here we go. And I'm going to view all. So I ran my scan, and I came up, it actually came up with 7. I've already dropped one of them because I didn't like the looks of it. And I did that because I went into Candle Glance. So these are all of the symbols that I'm looking at right now. Avista, AVA, Cal, CAL, Caleres, Hillenbrand, HI, Hormel Foods, HRL, Polo Ralph Lauren, RL, and then Semtech, SMTC. Now let's go see which one's going to be my pick. So I'm looking at these right off the bat. These didn't get crossed off my list after I ran it. I could see some problems on these PMOs over here, though. It looks like they might be backing off a little bit. So I may end up trashing those 2 right away. In fact, I'm going to do that. And my producer's going to be, wait. I'm trying to keep track of which ones. All right, and that one was also looking like it was turning down on that. So that leaves me with these 4, Avista, Caleres, Ralph Lauren, and Semtech. So these will be my 4 that we're going to take a peek at and see which one makes the most sense. So just looking at it from a candle glance perspective, I think there's some interesting formations here that I want to peek at. This is actually the one that's, this particular one, Avista, is the one that's caught my eye the most right now. And so I'm going to pull this up. We've got a lot of, we had that big jump. So I'm going to, let's take this down so that isn't included. Let's go to 8 months. That way you can actually see a little bit more action here. Oh, no. Not years. There we go. And there we go. So what's interesting I found on this chart is that little flag that's getting formed right after what I see as a descending triangle. So let's go ahead and annotate this a little bit. So here is the breakout. There we go. And this, I think you can make as the bottom of that triangle right there. Those 2 are pretty even. So we got the breakout, and now we're looking at a possible flag here. So I found that interesting just looking at that right off the bat. Now I'm going to get rid of these because there's too many lines there. I want to look at the actual support and resistance going on here. Okay, so I'm going to take we can go to that top part there, but I like the way this is lining up with these tops right in there. You can see we didn't close way up there, we closed down here. So I think this is a pretty accurate level of support. And you can look in the thumbnail, the 5-day EMA is providing similar support. Now I could see when I look in the thumbnail that yes, now this is another one where it looks like since I ran the scan intraday, we're starting to lose a little momentum, but that's because we probably came down off of the highs, the intraday highs. And so that might be taking that a little bit, showing us a little deceleration there. But I'm liking a Vista right now on here. Let's see, a little low in the volume arena, but that looks pretty good. So we already had that breakout from this area of what was resistance, formed a nice area of support. So we had some movement going across there. Like I said, I saw a descending triangle. So we got the breakout. So now I want to look at where my target might be for this. But I think we'll get into this one at 52.42. And so I think we're going to make AVA mine. And I'm going to save that in there. But I want to look at the weekly chart to help me with a possible target. All right. Well, it's trading at all-time highs. So as far as a target is concerned, I would just go here, and I'm going to go back to where we were. I would take a measurement of this trading channel and at least look for a move the height of that channel. As far as a target would be concerned, I would just be writing this and watching it as it goes, because again, we're looking at all-time highs right now that we're looking at. So watch that 5-day EMA, but I think this support level would be right around 52 would be my stop, right on that 20-day EMA. And upside potential, we'll see. We'll see how we do for next week. Let's go ahead and look at these other three, and hopefully I won't change my mind. The one reason I would probably leave this one off would be that it has already made quite a bit of a move. We've got the buy signal now has come in. It hadn't crossed over yet today, but you can see we've already kind of had the big move on this one. So I don't think I would pick this as my Monday setup. I would be watching it come down, hopefully pull back to that 34 level, and then make that move to get above that overhead resistance at about 36. Like the PMO, I do like that setup. You can see the scooter angling higher. It's now in the hot zone. And as well, the OBV is having a nice consistent rise here. You can see it very clearly in the thumbnail along with this move to the upside. So I think Caleres looks good. However, it's already kind of made the move, so I would hold back on that. Ralph Lauren, I think, is really interesting. And I know Tom's talked a lot about the retailers, especially retailers, clothing retailers. And I think this one looks pretty darn good for Ralph Lauren. Let's go ahead and write down some declining tops line breakout right there. Looks very nice, very clean breakout. And in that process, we're getting that 5-20-day EMA upside crossover. You can see that we go back over here, you can see that we had the 20-day EMA come down, kind of kiss that 50-day EMA, and then started moving back up. So I look at that as a bull kiss. So we kissed the line, but we didn't go through it, and now we're starting to make that move up. PMO is looking really good. Honestly, I think I'm going to make this my pick. I'm really getting my producer steamed in the background, I can tell. Okay, Gretchen, this is the one it's going to be RL at 110.53. I think this one looks much better. We can see what the upside potential is here, back here, probably around 118 and all the way back up here to 120. So I think this one looks like a pretty good setup. I would probably set my stop right around that 108 area for a really short-term trade. For a longer-term trade, I'd probably set my stop a little bit lower, down to more like that 105 range or just below. So I think that's going to be my pick. I'm going to save the changes on that one. And then we had one more to look at, and hopefully I don't change my mind one more time, but I don't think so. This one I think it looks really good, but I would be just a little concerned about the possibility of an island reversal. You know, if this had been a breakaway gap, we would have seen a little bit more upside at that point, I think, and we didn't get that. But it's sitting on that 5-day EMA. The PMO does look really good. And you can see the scooter is also making that move upward. And so I think this one looks pretty good, Semtech, SMTC. But mine this week, I think, will be Ralph Lauren. And Bruce, I'll give you a chance just in a moment. I went into Tom's blog, and this was his Monday setup in his blog, Trading Places. You can go look at it. But he picked Kohl's Corp, and I think we already wrote down the price that was in his blog as the starting price, and it was right around $60 and I think 5 cents or something. So he's actually getting a nice move at this point on Kohl's, and that is his pick. So Bruce, what do you have for us? We've got some time. I'd love to see it.
By the way, Kohl's is in my blog this week.
Ah,
So,
okay.
yeah, it was a really good example for the sort of a chart, candle volume chart that I did, that Richard Arms had innovated. And so anyway, you can go look at that and have a different look at Kohl's, the little sort of a different view, a different kind of charting. All right, so I'm going to take the screen here.
Yes.
I like your choice a lot.
Oh, good.
Yeah, that was really, I agree completely. Okay, so I have 3 ideas that I'm going to offer, and these are just from you know, every week I go through charts and try to get sort of a Wyckoff theme going, and I'm going to do this one daily. This is Gardner Denver. It's a industrial company, and we need to have like a lot less data here. Okay, so Gardner Denver is a I love this uptrend, beautiful uptrend, had a climax in January with a number of other stocks, and then turned down, showed weakness. But now this appears to me to be a reaccumulation structure. And what I really like about this is you can see all the volatility in Gardner Denver as it's going down into its lows at $29. And so volatility and volume, and you can see the volume is diminishing. As a matter of fact, let's do some annotating here. So you'll have to bear with me because I'm not used to doing this live under pressure.
You're doing just great. And forgive Bruce not having his charts exactly as large. I mean, he is a guest here, so we're going to forgive him a lot, right? Everybody.
Yeah, you got to forgive me. So is that a little better?
Yes, I think.
Yeah, okay. All right. So now the thing is that when we see this kind of volatility in the declines, big bars, higher volume, we expect that there's going to be a significant amount of supply that needs to be worked off. And so here's our trading range right here. And now we've had this very good rally up back into the range. So this sort of a spring action, we call this a spring in phase B, or the middle part of the range, comes back in, backs up. Now the second decline here is really a very small decline. And now we have a pretty good run up to this resistance area, and volume is starting to become active again. So I believe that we're going to at least get up to this resistance, and I think we could get up to the highs, maybe with a little more work. We may need a couple more backups, but this is one of my candidates. So I would submit this, and I'll just save it. And then another one that I have is FMC, ag chemical stock. And you can see here, this is actually pretty classic distribution up here. And we call this an upthrust after distribution. And I want you to sear this into your memory, because when this happens, so here's preliminary supply, climactic action, trading range. So here's resistance. All right, let's annotate. And I'm not going to spend a lot of time on this, but I'd love for you to go back and look at how well this support comes into play later on. Goes up, throws over one time, and then look at the supply that shows up. Huge gap, very poor rally attempt into the middle of the range, and then it's just this big decline, lots of volatility. But now we have something different going on, and this looks very constructive. This looks like it could be the beginning of accumulation. Here we have, I like this pullback. This pullback came on diminished volume, and then look at what occurred after that. Really robust rally. And so notice the attempt to pull back here. So volume is low. Very little, just basically a pause, very little pullback, and now it's back running again. I think it has a good potential to get back up to the resistance area, and so I'm submitting that as a candidate, and I will save it. And then the third one, I have so many to choose from. I know we have a limited amount of time. This one is a rather small company, electro scientific industries. It's actually in the semiconductor industry. And this appears to be potentially a large reaccumulation. And so we can see resistance, we can see support. And what I really like here is that there's a nice rally attempt here. The pullback can't get back to the lows. And then we have sort of a fair rally here, and then another attempt to come back down. But notice how this attempt to decline, let's make sure we get the volume in here because it's pretty low. You can see the volume just diminish all the way through here. So this decline is much more muted than this decline, with a spring at the lows. And I think this might have been earnings, but anyway, it's not really technically a spring. It would have had to have taken that low out, but it goes down, takes this pretty important low out, and then closes it very close to the high of the range. And now we have this really nice ascent going on. And so and volume is coming in. So I am submitting this, and I am going to make this one my choice for, this is just perform for the week.
Yes, you get 1 week for it.
Okay, so this is like less than $1 billion company. It's very small. I love the rally that it put in going into this reaccumulation, and I think it has the potential to get back to the highs. I'm submitting this as my pick.
All right. So, that looks pretty good. I like it.
So anyway, and so I'll tune back in next week to see how it goes. Oh, maybe I'm not in the next week one, but I'll check anyway.
Yeah, absolutely. Well, we'll definitely let you know how you did.
Okay.
And, yeah, it's been it's not been, I was telling Bruce earlier, it's not, the Monday setups have not been going my way lately, and I know it's because of really what's going on in the market in general, which is why when I sit neutral, I don't jump in a lot, if at all. And since things have gotten where I've been a little less comfortable with the bull market, I've sold, I've sat back, I just, so it's been really tough, Bruce, when you have to pick one every week, when honestly, I would never be picking anything really to get going in right now. And I know that's kind of boring everybody, which is why Tom is here. He is the short-term trader. He's in and out, in and out. So here are Monday setups up on the screen here.
My advice would be this, is to do your Monday setups on Sunday or Tuesday or Thursday. But Monday is a tough day to do anything.
It is true on so many different fronts.
Yeah, exactly.
Trading front.
Don't put any more pressure on you than you have to. So that would be what I would do.
That's your sage advice. Okay.
Yeah, right. To myself.
All right. So as you can see, my pick this week is going to be Ralph Lauren. I'm getting in at, I'm writing it down right now too, because I probably want to keep an eye on this one. Yeah, I thought that one looked really good, actually. Maybe I will get in. I don't know.
Me too. I like that.
Yeah. Okay. And then the other ones I had, you can see there, Bruce's symbols that he went over, and his choice, which was Electroscientific, ESIO. And you're getting in at 2015. So we'll let you know how that works out.
A very good fill.
Yes. And Tom's, we got right out of his blog. It's his birthday today, and he is off, but he did still write his,
Tom.
Yeah, he did still write his pre-market blog. So if you want to go take a look at that, and that was his Monday setup from his blog Coles KSS at 68.23. And with that, Bruce, I think I'm going to turn it over to you. We're so fortunate to have you as coming in as the co-host. And, people absolutely love it when you're on the show. So, of course, we were going to take advantage of you and have you do some Wyckoff power charting for us. You already started it with some of these Monday setups. So I know it'd be great to have you move on through some more.
I'm going to try to weave a theme today. I was thinking about sort of what I could do in the few minutes that I have here. And one thing that's really caught my attention is, and let's just put up a chart. You have to excuse me.
Oh, take your time.
Yeah.
We
So
have a wonderful audience. We really do. You guys are great. We do this show it's unscripted, as most of our regulars probably already know. But it's great, and we love getting your information in the chat room. And
you, you
so,
make you make it look so easy. You and Tom make it look so easy. And being here and trying to fill in, I can say that it's not as easy as it looks.
oh
So,
well, you're making it look easy too. So I'm going to
all
let you go. I'll quit
right. Okay.
talking.
So there's sort of two themes. Now, this is the consumer staples uh, sector, XLP, and I marked this up so that we sort of have a starting point to work from. And this goes back into the middle of 2017. I've included down here a relative strength chart of XLP to the S&P, and you can see that the peak for consumer staples really occurred in early 2016, and then they went into a relative strength downtrend. And this is as prices are going up. And I'm one to always respect when relative strength is either in a confirmed downtrend or a confirmed uptrend, which I define as being below a long-term moving average. I use a 39-week in this case. And then you can see here that once it gets below, it stays below. And when the trouble starts in the market, look at how bad it was for XLP. So XLP had an upthrust after distribution, made a minor new high, and then down it came. And look at the volume and the volatility in this drop. This is the way these upthrusts happen, is when they conclude a distribution, they can just become uncorked and just start to fall apart. So I want to just introduce this as part of the theme, and then we have another. Okay, and then what I want to do is I want to compare. This is a daily chart. Let's see, maybe I'll make this just a little smaller. Is this is XLP, and this is the XLE, the energy sector. And just to compare what's going on between these two sectors, we can see that after a pretty big drop with the market in January, February for energy, that it caught hold and has had a very good rally and is almost right back to its prior January highs. This is not the case for the consumer staples. And I think that these two themes are related to each other, because what's happening is the single biggest component, or the single component that's part of every business's expenses, is the energy component. And we've seen energy go from the high $20 range for crude oil up to $70. And we're all seeing this at the pump, and businesses are seeing this. Consumers are seeing this. The thing we saw in March and April, February, March, and now the data in April, is that credit card debt for the first time since 2011 is actually declining year over year. And so we're starting to see a downtick in consumers' willingness to extend revolving credit in the form of credit card debt. And so consumers, even though they're getting a big tax cut or a tax cut of sorts, businesses, even though they're getting tax cuts, are finding that these tax cuts are being consumed by other expenses, which in this case, I believe, is partly related to energy. And so I think that we have a theme here that we have to keep in mind. And I don't think it's necessarily a theme that is bad for the market. per se, but I do think that it's going to bifurcate the market. I think you're going to see some themes doing well, other themes not doing so well, and we're going to want to just be really good tape readers in terms of determining where we want to commit. So here we can see energy, the energy sector. This is weekly. We can see that there's a large, what appears to be a large accumulation structure that goes all the way back into late 2014. And so the whole time that energy has been languishing and really has been a laggard in relationship to the market as a whole, you can see here that it's been preparing itself. And now we have a really nice run that's occurred in April, May, where energy, the sector, has lifted up to the resistance area in a really robust manner. It's moved up really nicely. I do believe that in this area of resistance that we have, that we may be experiencing some resistance that may cause the market to stall for a little bit. It doesn't have to, but we can see here that resistance is in force going all the way back to 2015. So keeping that in mind, let's look at the point figure chart. So here's where we can really see the fuel in the tank. And we can see that if all I did was I just took a count from this low over to here, which was 41 columns. It's a 3-box reversal point and figure chart. So you multiply 41 by 3, it gives you 123, and then you count from the low, which is at 47. That gives you gives us a target of 170, and then from this point 90 or 61, it takes us up to a range of 170, 184. And so we have a lot of fuel in the tank. Now we can't tell how long it will take for a potential point figure count to be fulfilled, but it does give us an idea how much fuel's in the tank. It could take years potentially, or it could happen in a shorter period of time. But here we can see that there's fuel here to be used. And so I'm thinking that this is a place to emphasize investment strategy and investment capital. And an example case study is ConocoPhillips. And so we can see here that there's this big decline accelerating down on volume, and then we have an automatic rally. So selling climax, automatic rally, and then a spring or a shakeout, which occurs early in the accumulation. And then look what happens. After that, there's a change of character in the structure of this chart. So we have a pullback to support, but notice how long it takes. It's this a lot of effort involved. And this takes 2 quarters roughly to come back to support. And then we have a really nice, robust rally up to a new minor high. And then it pulls back in 2 stages. But look at this. Look at the effort that's involved. This accelerates down into the low with a sharp rally, and then this decline is much more muted and can only go back to this low, and then it pivots off this area right here, and we have a really good rally, really good change of character in ConocoPhillips, and it goes up, makes a sign of strength out of the accumulation area, and then backs up for one last backup, and now it's marking up and trying to get to the highs. So this is a very sort of a classic accumulation structure for this chart. And so I believe that we can look at this as an example. Here's another one. These are both leadership names. This one is actually up and out of its 2014 high. And so we can see accumulation. Here's an attempt to spring the lows, and it rallies up. goes up to resistance, and then look at this. It doesn't really even pull back. It just gets into a trading range and stalls in this area, and then has a really good pivot and rally up and out of the range. Comes back one last time for a backup, and look how long these take. This is like 6 months. So if you're not looking at the long-term charts, it's tough to see the theme developing. And now we have this really nice rally up to resistance. This resistance holds here, pulls back to the 39 week, and now the rally is actually accelerating at new highs. Probably needs a rest now that it's through the highs. But this is a really attractive chart, and it has a nice point figure chart. So this point figure chart is, I'll just give you the, amazingly, this chart counts, and I'll let you go back. This is just a traditional scaling 3-box reversal. Make one of these at home, and then I counted from here over to here, and I had 39 columns. This counts up to 128.5, 135. So again, we don't know how long this can take, but this is a very, very large accumulation structure. And so this would be an excellent candidate to campaign. So even for people, the traders that are short-term, more short-term campaign oriented, this could be a great leadership type stock that could do quite well in the future if these point figure counts are going to be fulfilled. So how are we doing for time?
Oh, you're doing just fine, Bruce. Just keep
okay.
going.
Cool. So now let's look at the other side. And that would be to look at, this is a recreational products. And so we can see here that recreational products, and actually the other one, I think I'll just shorten this up and go to recreational services. Excuse me. Sorry. So the recreational services, you can see that there's this upthrust, looks like an upthrust after distribution. It declines, tests, and then goes down. It's completely out of this range, which makes this look a lot like distribution. And so one of the stocks in the group. So this is an example of a group where they have a lot of expenses that are tied to energy. So their expense structure is getting worse, even though they have some tax benefits coming. And if this is recreational and the consumer feels like they need to pull it in a little bit, I don't think the consumer's in trouble. I think they're just being careful because of the effects of these rising energy prices and the effect it's having on the prices of other goods and services. So they're just being careful. The economy is really good. We're seeing sectors of the economy doing quite well. And so this is just a case where we have to become better stock pickers. And this is a perfect example why we have to do that. So as an example, let's just look at one of the stocks in this group. And this is Royal Caribbean. So think about their situation. This is a stock that had a really nice uptrend for a long time. And then notice here is the internal peak in the relative strength. Now this is daily, not weekly, so it's a shorter time period. But this is very distributionalist orientation. And the things that I would point out, and I will just annotate, is you can see here a climax, gorgeous climax, and then an automatic reaction. Here, look at how well support holds all the way through here. I mean, this is right here. This is like, if there's only one tool that anybody learns about Wyckoff, it's how to identify buying climaxes, selling climaxes, and the automatic reaction. Because look at how these two support and resistance areas inform the trading in the stock for the months to come. I mean, this is really useful. So there's a big decline after an upthrust, comes back up, tests. You can see the volatility increasing in Royal Caribbean. It's very high here. It's high here, and look at the rally. The rally can only get up to the midpoint, and then the volatility even increases from here as it goes down and out of the distribution area, and then a rally into old support, new resistance forms, and then a big decline occurs. Now, Royal Caribbean, I use that as an example because it's in a group that's performing poorly, but think about their business model. They these cruise ships use huge amounts of energy. The food, they have huge food costs, and so food's going to be expensive. And if food prices are going up because energy prices are going up, then and also they have trouble getting the labor that they need to be able to serve on these ships. There's a lot of expenses that are piling on to them at an ever higher level. It's not a virtuous cycle anymore for them where they can see prices go up. The cycle, they're on the vicious side of the cycle. And so you can see that developing in this chart. Well, think of other businesses that might be subject to the same forces on their business model. And so I will only, let's see, just to conclude, I will just point you to some themes that I think might be beneficiaries of the of this energy cycle, and that would be building material or building materials. Have a look at those. That's DJU SBD, and then rail. There's no more efficient way to move goods than by rail. DJU SRR. So have a look at rail, which is doing quite well. Marine is a great way to move freight. Also DJU SMT, and then trucking DJU STK. So anyway, have a look at those and think in terms of how you can or organize your trading strategies around this new bifurcated market where we have a shift in the winners and the losers. So I'll leave it with that.
Excellent. I'm not sure if we have a summary slide or not, but I will be putting, Bruce is going to forward these charts to me from what that he just presented. And so I will be putting those in the MarketWatchers Live blog recap, and you'll be able to get to them from there. And with that, I think it's time to get started on the 10 and 10. And I know you just were talking for a while. Are you ready to give the 10 and 10 a try?
Let's do it.
All right.
Yeah.
Indeed. Let us do it.
Can we do 12 instead of 10?
Oh, you can do as many as you want. No, actually, we need to.
I'm kidding.
We need to save time for the DecisionPoint report at the end.
Of course. Much more important.
Okay. Well, let's go ahead and we're going to get started. And the first one, I think you probably already started it for us, ABAX, Abaxis Incorporated. And just so everybody knows, we had about 50 requests for symbols. And so, Bruce gives us a pretty good outlook, and we may not get to even 10 today. So just count yourself very lucky if your symbol gets selected, and keep voting because the most popular will still be the next one. So right now it looks like NVIDIA is leading. If you'd rather see something else, get in there and vote in the chat room.
I love this chart. And here we have this really nice accumulation structure that is actually looks as though it's reaccumulation. And so after a couple of attempts to go up, it makes a series of higher lows, and then it just crowds up into the resistance area and then jumps out. And this is a really attractive jump, really strong, high volume, leaps up. And then you can see that we have a climax. It's very much a climactic bar. Look at all the volume. So when you see that kind of volume on a big bar like that, you know that it's, you can just expect that it's going to stop the trend at least for a while. And that's exactly what happened. And so we have, I guess we can annotate this. And so we can see resistance here at the climax. We can see support. And so the support is, it stays right in the middle. Now, what I would say about this is it looks really good to me. It looks as though this is a reaccumulation, but I believe that there's more work to be done. And so we have a nice rally up here. We have 2 attempts to go down. The volatility is a little greater on this decline than on this one. I don't believe that's a big problem. There's a lot of volume here. So mixed into this volume is demand. And here you can see an attempt to test these lows. So here, this is a, let's see, this is a test of that area. And you can see that it makes a higher low, and then it starts to run up nicely. There's a tail right here. I believe that it would be really constructive for Abaxis if it had an attempt to come back down again and showed really no ability or very little ability to be able to come back to the lows again, and the volume dried up. Here you can see the volume diminishing on the way up, which leads me to believe that there's going to be a pause somewhere in here, and it's going to come back. Let's see, like sort of like this. It's going to come back, and what we'd want to see is it really resisting declining any further, and then have another jump and back to the highs. So anyway, so there's
all right.
I have to remember I'm doing 10 and 10, that I'm on the clock.
Yeah,
So,
well, we'll get as close as we can, like I said. All right, the most popular request currently in the chat room, and yes, it did win NVIDIA, so they would like you to give us a Wyckoff look at NVIDIA.
Okay. Well, you know, what's not to like about NVIDIA? Look at this beautiful uptrend. I mean, it's just been such a leadership stock for so long. But we can see here that, and I'm going to try to speed annotate. So here we have what I would call preliminary supply. And then here we have what amounts to a buying climax. And then after the buying climax, look at the speed with which it declines, automatic reaction, and now we have a secondary test. And so all this means is that it's going into a trading range, and that's exactly what it did. And so now we can see that volatility is high here, less so here. Another attempt, another secondary test. And this decline is more formidable, and it comes on more volume. So that isn't necessarily a reason to become, you know, it's a reason to be alert, but it's not necessarily a reason to expect that NVIDIA's in distribution or is done going up. This is the part that I like, is that it doesn't get back to the lows of the automatic reaction here, even though this is volatile. Volume tends to dry up. Now it's rallied and it's tested. This test springs this low, and then look at the quality of the rally. So now there's a couple of gaps. There's a gap in here, a little bit of a gap here. Volume is quite high, which I think is constructive, but I think it's going to stop the advance. There's resistance here, and so we need to see what it does at resistance, and which is right there. And so I bet it stops, has a backup of sorts. We don't want the backup to come back into the trading range by much, maybe a little bit, and then from there be able to continue on. And backup that doesn't go back in or slightly back in could be viable. So anyway, so there we go.
Excellent. All right, let's see. The next one I'm going to give you is Mankind Corporation, MNKD.
Interesting. Okay. So we can see climactic action in October. And try to annotate this so we can see here. And so we have resistance, and then here we have a decline. We don't have much of a rally, so maybe the rally is here. I think that this stock, my big concern with this, just in a nutshell, with the time that we have, look at how well after it jumps out here and it accelerates and has a little climax here. It has a little two-stage decline, tests the lows, and then turns around and pivots off of this and goes right back up. Here, it just goes down and down and down, and then accelerates, has a climactic decline. I think this climax could be in the range of the lows, but there's not a very good automatic rally. Automatic rally shows that there's some buyers that are available that are interested in owning the stock at these prices. So what I'd want to see is a good rally and a reaction, and see the reaction come back to the support area. And so I would just be expecting that we're going to get some sign of demand, and then an attempt to come back, and the attempt to come back successfully is supported in and around this area, maybe slightly below. So anyway, so I would be waiting. I would want more information.
All right. Now, this one's interesting because somebody is asking if for WB, Weibo Corp,
Oh yeah.
this is a Wyckoff spring. So
Ooh.
WB.
Ooh.
What say you?
Oh, okay. So here we can see that we have a climax here. Climax. Oop. Wrong button. Oh, wrong button. We'll fix that arrow later. So here. So automatic reaction here. It's at support. Look, this goes right back to the point I made earlier. When you have a climax, automatic reaction, resistance, support, it's right back at support. You're seeing the opportunity for a spring here. I see the person who recommended the stock. I see that they're thinking on this. This is a really nice little sign of strength. There's a big gap here in the decline, back to support, which shows there's supply. And so supply, that's part of what it makes a spring, is supply shows up. The way we think about it is the composite operator, who's our fictitious super trader, super position builder, is that they would look at this and say, oh, how much is there more supply? There's supply here, is there more? And so what we need to see, this would be referred to as a number 2 spring potentially, or a number 1 spring which fails. So a number 1 spring just breaks down and just keeps going. So here we would want to see a rally and a test. Every spring on volume needs a test. And so we haven't had the test yet. So we need a rally and a test. The test should hold at a higher level than this 105 low. And so we need to see that, especially considering how this Weibo gapped down here and went right back to support. So it's not out of the woods. And you can see here that it just keeps making lower highs all the way through. So anyway, very interesting stock, and we will keep an eye on that. But I think that there's potentially the need for a good test to happen.
All right. Let's see. Let's finish with one more, number 5. Okay. And this is a shout out for our Canadian friends. This is an oil and gas producer, Meg Energy, and the symbol is MEG, MEG.TO.
Cool. Okay, so here is, this is a bit of a spring here. So you can see supply shows up and comes down to the support area. We have a rally here and then a reaccumulation, springs the lows. Where's the test? So the test is actually here, right there. And so the test is well off the lows, but look what happens. It attempts to come back and it can't pull back at all. And then pivots right off of that and gets up to resistance and just keeps going. So in this particular case, it looks very constructive. This is exactly goes to the theme of the day, which is this whole energy, this turn, positive turn for energy. And so I see acceleration occurring right here, and the volume is quite high. This smacks of some kind of a climax. Climaxes happen all the time in uptrends. So we would want to see, after a climax, wherever this ends, it could be higher than this, is to see a reaction and then a pause. And so a pause doesn't have to take very long, but I think the stock is too extended to try to position it now. But I would definitely go back and take a point figure count of this area and see how it projects. So I like it. I think that it's probably going to have a reaccumulation of some sort, may not be very long, and then be able to continue on its way. Looks really good to me. This is a classic change of character right here.
Awesome.
And then look how low the volume is on this dive down below the spring. So this spring it breaks down. There's no volume. And actually, when you have low volume on a spring, you can buy it right away. As soon as it pivots, you can buy it. And so that's the big difference between a low volume test, low volume spring, and a high volume spring. Is a high volume spring needs to be tested.
All right. You didn't. Yes. You did mention point and figure. Somebody asked whether you use vertical counts. I know you do a lot of horizontal counts. Do you do vertical?
Vertical counts are really popular. I know a lot of people that use them. I don't. I'm strictly a horizontal point figure guy, but I certainly wouldn't discourage people from using them, and they use them quite effectively. So,
all right.
Yeah. So.
Okay. Excellent job, as somebody just said in the chat room.
Oh, well, thank you.
Excellent job explaining real live stock examples. So
is this like 5 and 15?
Yes, it's no big deal. You know, everybody who watches us regularly knows how we run things here. We're pretty close to the mark, but
well, that was really fun. I enjoyed doing those. They were all great examples. Thank you. And that's fun to do.
All right, excellent. So those are the symbols that Bruce went over, and I will get those charts from him with those annotations on them, and those will be up in the MarketWatchers Live blog and chart list at the end of the show. So enjoy that. Let's go ahead, though. I'm going to steal the screen, and it's actually time to quickly talk to you about ChartCon coming up. So let's go ahead and do that. And I know you're going to be there, Bruce, and I have to tell you that the one we did in Napa in 2016, one of the best conversations I had was honestly with you, sitting by the fire, both of us holding a glass of wine. And I know there was a big group of everybody, and everybody had their little places they were talking, but I remember specifically you and I talking on a couch. I can't remember exactly what it was about. But I
remember it well, and it was a wonderful time. And so if people can come and join us, because we had attendees that were sitting with us, and it was really just fun.
So. Absolutely. Well, I don't think you can get in on the cruise at this point. We are still taking the reservations online for you joining us online. It is an online conference, so very easy to attend. I know we had people attending from all over the world. It was really fun, and we do have opportunities for social networking during the show, during the weekend for ChartCon. So very enjoyable. I think it's going to be a great time, and the speakers are outstanding.
All-star cast.
Absolutely.
It's going to be wonderful.
There you are, right there.
And I'm speaking early on the first day. I'm grateful for that because I was a nervous wreck last time. And once I was done, then I could pay attention to other people.
Exactly.
It was really fun after that.
Yeah, I think one of the worst experience I had was and it was one of the early ChartCons, was going last, the absolute last person. And I was like,
cruel.
I am not the keynote here. I am the last person. Last person you want is the last person. But that was early on in my career. And I know I was a complete nervous wreck, but things change.
Well, it's really fun. And I can't wait. And everybody should sign up for this.
Indeed. Yeah. All right. So let me go ahead and I'm going to give everybody a quick market update. See what the market has been doing while we've been having our wonderful chats. Okay, so as you can see, the markets are coming down off of the intraday highs, and look at the Russell 2000 pretty much falling off the earth here as far as where we were at the open. We're now getting ready to test those intraday lows that we saw yesterday.
I don't mean to interrupt, but
no,
I have the Russell. I actually made a chart of it. I don't know that we'll have time for it, but it's at key resistance. Everybody should make a chart of it, and it's the way it's turning off of that is just classic.
There it is.
Yeah. So key resistance, and that doesn't mean that it's not going to be a really good place to be, but it's going to back up here.
Yeah, and you know, you can see either a ascending triangle if you want to go that direction, or even I mean, we still have gotten that breakout from that declining tops trend line though. So, but yeah, very key overhead resistance. We'll have to see. I know Tom's been talking about small caps doing well with the rising dollar, but the dollar has started to turn back down. I suspect it's pausing, but we'll get into that on the DecisionPoint report. So let's go ahead. I'm going to finish up here with what's happening. You can see that TSX, Canadian markets, you know, while they pulled back slightly, not seeing the same kind of reaction to what's going on in the large caps right now. I mean, right now we're seeing the NASDAQ and the S&P getting close to Friday's closes. We could end up with a negative day on our hands here. Treasury yields are up slightly, but staying mostly around that 2.99 range. You can see EUP, big gap down. Made some kind of a recovery, but now we're moving sideways. I'll be going over the dollar and gold more closely in just a moment. USO as well. TLT, you can see big gap down. We're trying to make a move back up above this intraday overhead resistance, so we'll have to watch that one closely. I will go over TLT. VIX is still, you know, it's rising now, likely because we're seeing a little bit of a failure right now of the markets, but we're still looking at readings, you know, between 12 and 14, and I'll be going over that chart shortly as well. XLE, we were talking about energy, probably bring up the poll that we have running right now. Go ahead and check that out. We'd love to get your opinion on whether XLE will be the best performing sector by the end of the month. So curious what you all think about that. And with that, I'm going to conclude the last market update and get into a very quick DecisionPoint report. There's not too much to report, so no worries. We won't be rushing too much here. I do want to let you all know that you can find all of these charts that I'm going over in the DecisionPoint live chart list, and that link is available at the top of the DecisionPoint blog, and all of the blog entries, I believe I have links to that DecisionPoint live chart list. So this is where you can find all of these charts and more. Just go into those chart lists. So let's go ahead. I'm going to get started since we're running a little low on time. I'm not going to go over all of the big 4 indexes. I'm going to look at the S&P and show you what we're seeing right now as far as DecisionPoint is concerned. Go ahead and make that bigger for everybody. All right, so today I did want to point out that we should be getting that intermediate term trend model buy signal. That is generated when the 20-day EMA crosses above the 50-day EMA. Now, if those of you recall last week, and I believe it was on Thursday, the NASDAQ 100 finally gave us an intermediate term trend model buy signal. That's the first one currently on those scoreboards. So I was feeling a lot better about this bounce that we're seeing off of this rising bottoms trend line that honestly you can draw all the way back into 2017. Good news to see that. And I felt a lot better about what's going on in the markets with this breakout from that declining tops trend line, especially, like I said, seeing that NASDAQ 100 put in a new buy signal in the intermediate term. And now we can see the S&P 500 by the end of the day. I will probably be writing a DP bulletin to let you know that we're getting an intermediate term trend model buy signal in the S&P. I want to go ahead and look at IWM real quick, Russell 2000. We did look at this chart a little bit earlier with the actual Russell 2000. I think that when you look at IWM, we're still looking at some support that does seem to be holding here, that I've marked kind of near where we closed previously back in March. That's where I'm looking at my support line. So I think that's, you know, considering we're having a really bad day right now, having dropped, you know, quite a bit on the day from the open, I still think we're looking pretty good as long as we can hold that support level, that 5-day EMA. But you can see all of the trend model buy signal. So you got Russell 2000 got these trend model buy signals in the intermediate term long before those major indexes. And as I said, we're still waiting as far as the Dow and the OEX to get those intermediate term trend model buy signals. Let's go ahead and I'm going to look at our ultra short term or climactic indicators. And this is where I was talking to you a little bit earlier, Bruce, about how I use the VIX as a sentiment indicator. And so I look at it kind of on the opposite way a lot of people look at it, which is why I invert my VIX scale. Because to me, when you get very low readings on the VIX, that means sentiment obviously is very bullish. Sentiment is contrarian. So in the very short term, when I see these very low readings or these penetrations of the upper Bollinger Band, again, on the inverted scale, that's an overbought reading to me. So I usually will expect a little bit of downside action when we get that. Now we had these in breadth. We saw these climactic readings. Friday, nothing really came in. So at this point, I think we're looking at neutral as far as the climactic indicators, nothing overly exciting. But you can see where we had these climactic readings. And, you know, the first one came off of a decline on this nice big move. And so that was a nice buying initiation. When I saw these readings the second time around, they were coming off of a nice rise. So I was actually looking for a pullback or at least some sideways action. We did get kind of an unimpressive day on Friday after those particular readings came in on Thursday. But overall, nice breakout, but we can see now this, wow, looks like a shooting star forming, and that's in the short term.
One thought I have about the VIX, just real brief, is that that came up as a result of our conversation, is that when the market turns, like even if it's just having a small correction in an uptrend, the VIX, I believe because of the tremendous volatility in the beginning of February, the VIX will probably have a lot of volatility really quickly. Instead of just sort of like, you know, going up a little bit, it could go up a lot. And even with a small correction, and I think that would be a really bullish sign, actually.
Absolutely. Yeah. And, you know, really, like I said, when you look at these overbought readings coming in, again, on an inverted scale, these are coming in, these breaks, you know, right before upside moves. I mean, they're pretty right on, you know, when you get those really big stretches and volatility, as we saw, for example, after the big correction. So I think the readings are interesting, but honestly, right now, I'm not seeing anything overly interesting as far as they're concerned. So let's go ahead and look at the short-term indicators very quickly. They're now overbought. They're starting to turn around. They could move up a little bit higher. We've seen them move higher, but at this point, this makes me a little concerned as far as the short term is concerned. I think these are reading bearish. Intermediate term indicators, they are actually starting to look bullish to me. We got those positive crossovers on the signal lines for the ITBM and the ITVM, and we're looking right now for some breakouts from those tops. And I was concerned earlier because we did see a negative divergence on these particular indicators, but now we've kind of reset, is what I would call it, when we got those positive crossovers on those particular indicators. So at this point, I think in the intermediate term, if we can get a breakout above those previous tops on these indicators, I'll feel a lot better in the intermediate term. So I think that the intermediate term is actually still looking pretty bullish. So I'm looking for a pullback in the short term and possibly a move again back upward. And, normally, obviously, if you've been watching the show for the past couple of weeks, I haven't been particularly bearish. Bullish as far as the move. I'm still a little bit cautious, but I think we're seeing some signs that are certainly making me feel better about the market. And that would be these intermediate term indicators starting to move, that breakout from that declining tops trend line, holding that long-term support. I think there's a lot of key information that we're getting right now that's certainly giving us signs that the market is turning around. So I'm feeling a lot better about it, which is interesting since we're in that go away in May phase. But
I have some intraday point and figure charts of the S&P that have the potential to get to the old highs.
See?
Yeah, so it confirms, I think, your indicators.
Yep, I think they're awesome, those indicators. So they're pretty much, I'll be talking more about those. Yeah, they're pretty right on. I think they really, well, that's why I present them to you all the time, everybody. So last week I was talking about the fact we'd reached this sort of interim area of overhead resistance. My expectation was to see a bit of a pause. We are getting a pullback. I'd like to see, if you look in the thumbnail here, I'd like to see it hold that gap support right there. I think there's a really good chance it will. When you look at this PMO, it is overbought. It has turned down. We do need to see it unwind. I was hoping when we saw this decline, this pullback, that we might get the PMO to do a little bit more than pause as it is right now, because it is in that overbought area. And, so I would look for it maybe to pull back just a little bit more or move sideways, kind of consolidate along maybe that support area around 2420 and watch for that. Hopefully we can get that PMO out of overbought territory, because that it'll be a lot nicer if we can get that reset on it. The next one I want to look at is gold. Since we looked at the dollar, the first thing I'm going to point out, I'm going to go to the bottom of this chart. We have a really high reverse correlation going on between the dollar and gold. And, it's almost always on the reversed. But we're in particularly in this area where they really are traveling opposite directions. So what I'm going to say is that with the dollar, which we just looked at, pulling back, possibly ready to consolidate some more, which is what I'm looking for, we should look for the opposite, or the opposite going on in gold. Well, if we're going to consolidate or move a little bit lower in the dollar, I would expect to see exactly what we're seeing here, is support being held at that 200-day EMA. Prices are starting to come back up a bit. I would expect to see gold do okay until the dollar is going to switch back into gear, and I really am looking for the dollar to rally again. So it'd be nice to get gold up here a little bit higher, so it might be able to hold that support level when we do get the pullback. I think the PMO is looking encouraging, but the scooter is showing me that despite interest coming in here in gold, we're getting a little bit of I just don't like seeing that scooter starting to fall like that. And again, we're watching high inverse correlation, so I think we've got some good times ahead for gold in the very short term. But I do suspect the dollar is going to make another comeback, so I would expect gold to pull back. And again, the hope would be that it would hold that support, that 200-day EMA. I'm not seeing enough weakness here to say that will break down. I think a test of it again is highly likely. USO, and then we'll cover bonds and close this show off. And what you can see, USO, we got that bull kiss, as I call it. It's sort of a fake out. In this case, it was a way for USO to kind of consolidate. This was what I was expecting to see on the dollar, a bit more of a sideways move, but we are pulling back on it. We got the breakout on USO. We're starting to top out a bit, but I think the PMO still looks good. OBV, we're still seeing rising bottoms on it. Not really thrilled when I see a lower top, though, on the OBV. And if we make a comparison, we've got tops that are rising here, and that would be considered a negative divergence. So as far as USO, we're looking at the energy space getting ready to do really well. So I would expect to see it continue to bounce off that $14 level, maybe a pullback there based on just the fact that, like I said, I'm seeing this negative divergence with the OBV. And I think you could see a pullback, back to just under $70 for WTIC as far as the barrels of oil go. One more, and then we'll close the show out, and that would be bonds. And as we can see, I like the fact we have this PMO buy signal now. I didn't update that annotation, which I need to do. I think that's great, but we have not been able to get above that overhead resistance. And I think if you were to draw a rising bottoms trend line, I mean, it would be very steep, but that still would be, it's an ascending triangle. You're supposed to expect the breakout there. PMO is saying that we should expect the breakout there. But bonds have just been so weak lately. I'll watch for that breakout based on the fact that we are getting this move on the PMO. But I'm not particularly, it's not a place I'd be at this point, into TLT. That I just don't see it as a good move. And you can see that gap too, also on that resistance level. So, all right, well, that pretty much closes out the Decision Point report. I have some summary slides here for you, and I'm not going to read them to you. I always say that I'm not going to do that, so I will not. But the one thing I want to give you is that short term, I think there's still a little bit of weakness right now. I'm looking at those very overbought indicators. So in the short term, I'm still feeling a little bit uncertain. Seeing the move today, pulling back, we got that big move in the morning, and now we're pulling back, which is a bit of a concern. So I can see short-term bearish. Intermediate term, though, I think we might be out of the woods here. And then as far as the big four, you can see the setups there as well. Well, I'm somewhat bearish on the dollar. I just think it's pausing. It needs a pullback. Which means gold's probably going to do okay for a little while. But with that, I'm going to move it up because, man, we're already down to the very end. Bruce, I just want to thank you for being here. It was great to have you.
Thank you.
And we're going to just close this off quickly. Weekly schedule, there you go.
And thank you, Erin, and happy birthday, Tom. And I realize how hard you work to make it look so easy.
Oh, well, thank you. So I want to thank all of you for being with us today. Please remember to complete that survey as you exit. You'll find the link below the viewer. We love to get your feedback and hear what you think of MWL. I'm sure Bruce would like to know your thoughts on his guest appearance today. MarketWatchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 Eastern. Have a great afternoon, everyone. And we'll see you back here tomorrow with Tom. Happy trading.
Thank you.